Intel, the worst performing chip stock of the year, down over 50%. What lies ahead? Hello, everyone. Welcome to my channel. Today, we're diving into the story of a tech giant that once dominated the global chip industry, Intel. Intel is failing. The era of Intel is over. Intel will be left behind in the age of AI. Negative news surrounding Intel has been overwhelming, plummeting stock prices, layoffs, leadership shakeups, you name it. In 2024, Intel's stock price plummeted nearly 60%, reaching its lowest point since 2013, and it was even removed from the Dow Jones Industrial Average, replaced by its competitor, NVIDIA. So, is Intel truly a company in decline, or is it merely undergoing a painful transformation with the potential for a comeback? Today, let's explore Intel's current challenges, the reasons behind them, and whether it's a company investors should still keep an eye on. To provide a clearer picture, we'll break down Intel's situation into 4 key areas. Why did Intel miss the AI wave? Why has Intel become so difficult to manage? What's next for Intel after Pat Gelsinger's departure? Is Intel stock worth buying now? Before we begin, I'd like to clarify, I'm not here to criticize Intel for the sake of it. As one of the few companies capable of manufacturing advanced chips, Intel plays a critical role in the semiconductor industry. For decades, Intel's chips have been at the heart of personal computers and data centers, driving significant advancements in global technology. However, as the saying goes, I saw him build his high towers, feast his guests, and then watched the towers crumble. Intel wasn't always in trouble. During the era of mobile internet, its stock price nearly tripled from 2012 to 2020. So, what caused Intel's downfall from its peak? 1. Why did Intel miss the AI wave? To understand Intel's current struggles, we must first revisit how it missed the AI revolution. Let's go back to 2017, when Dutch lithography giant ASML began delivering extreme ultraviolet (EUV) lithography machines to chip manufacturers. These machines are essential for producing advanced chips, as they use EUV light to etch incredibly fine circuit patterns onto silicon wafers, a necessity for chips at 7 nanometers and smaller. At the time, Intel's then CEO, Brian Krzanich, believed that Intel's existing lithography technology was sufficient and saw no urgency in adopting EUV. He underestimated the revolutionary impact of EUV technology on chip manufacturing and the speed at which competitors would catch up. As a result, TSMC and Samsung quickly embraced EUV, achieving breakthroughs in chip manufacturing. By 2019, Intel lost its largest customer, Apple, which shifted its iPhone and MacBook chip orders to TSMC. Leveraging EUV technology, TSMC overtook Intel in process technology, producing smaller, faster, and more energy-efficient chips. This series of events dealt a severe blow to Intel. Worse still, Intel faced significant challenges in the development and production of its 10 nanometers chips, delaying product upgrades and diminishing its competitiveness in the market. Meanwhile, the rise of artificial intelligence profoundly impacted the chip industry. AI's exponential demand for computing power rendered traditional central processing units, CPUs, insufficient. Graphics processing units, GPUs, with their superior parallel computing capabilities, became the preferred chips for AI applications. Enter NVIDIA, which capitalized on this trend and quickly emerged as the leader in AI chips thanks to its dominance in the GPU market. In contrast, Intel lacked standout products in the AI field. Although it introduced AI-focused chips like Xeon processors and neural network processors, NNP, these products lagged behind NVIDIA's in both performance and market share. To summarize, Intel's failure to ride the AI wave stems from underestimating EUV technology, leading to a loss in manufacturing prowess, misjudging the AI trend, failing to shift its product strategy toward AI-driven demands, internal management issues, including slow R&D progress and production bottlenecks, which hurt product competitiveness. 2. Why has Intel become so difficult to manage? Another major challenge for Intel lies in its increasingly complex business structure, making it a notoriously difficult company to manage. Unlike its competitors such as NVIDIA, AMD, and Apple, which focus on chip design and outsource manufacturing to foundries like TSMC, Intel follows the IDM, Integrated Device Manufacturer, model. This means Intel designs, manufactures, tests, packages, and sells its chips all under one roof. The IDM model has advantages: control over the entire supply chain, enabling efficient R&D and production; flexibility in product strategies, allowing quicker responses to market demands. However, its drawbacks are equally significant. High capital requirements, as building and maintaining chip fabs is extraordinarily expensive. Longer R&D and production cycles, making it harder to launch new products quickly. Overextension, with resources spread thin across design, manufacturing, and other areas. Additionally, Intel faces fierce competition both internally and externally. In chip design, it competes with NVIDIA, AMD, and Apple. In chip manufacturing, it contends with TSMC and Samsung. In AI, it battles players like NVIDIA and Tesla. This forefront war means that any misstep in one area can have cascading effects across the company. For example, delays in Intel's 10nm chip production not only hindered its CPU upgrades but also cost it major customers like Apple, severely impacting revenue. 3. What's next for Intel after Pat Gelsinger's departure? In January 2024, Intel CEO Pat Gelsinger resigned, marking the beginning of a new chapter for the company. During his tenure, Gelsinger championed Intel's transformation, aiming to reclaim its leadership in chip manufacturing. His IDM 2.0 strategy sought to enhance Intel's manufacturing capabilities while partnering with third-party foundries and establishing a new chip foundry business. However, his reforms faced significant challenges. Slow progress in manufacturing technology, with gaps remaining between Intel and leaders like TSMC and Samsung. Economic uncertainty and the cyclical nature of the semiconductor industry, which disrupted Intel's transformation plans. Gelsinger's departure raises questions about Intel's future strategy. Will the new CEO continue the IDM 2.0 strategy? Will Intel consider spinning off its manufacturing business to focus on design? How will Intel address competition from NVIDIA, AMD, and TSMC? 4. Is Intel stock worth buying now? From a valuation perspective, Intel's current price-to-sales ratio is just 1.7, significantly lower than NVIDIA's 42 and the industry average of 17.4. This suggests that Intel may be an attractive option for value investors. However, several risks remain. Can Intel successfully transform and regain its manufacturing leadership? Can it achieve breakthroughs in AI and release competitive products? How will macroeconomic conditions and semiconductor market cycles affect Intel? What strategic direction will the new CEO take? In conclusion, Intel faces immense challenges and uncertainty but also presents potential opportunities. For risk-tolerant investors who believe in Intel's turnaround, buying the stock at its current low could be worthwhile. However, for those seeking stability, it may be prudent to wait for more clarity on Intel's future strategy and leadership. Final thoughts. Investing involves risks, so please conduct thorough research and risk assessments before making any decisions. Thank you for watching. If you enjoyed this video, please like, subscribe, and hit the notification bell so you won't miss future updates. See you next time.